India is 106 exploration for an evaluation of mineral resources. So the objective of the standard is to specify that the financial reporting of the exploration and evaluation of mineral resources. What definition? The exploration for an evaluation of mineral resources is the search for mineral resources, including mineral oil, natural gas, similar non-regenerative resources, after the entity has obtained legal rights to explore a specific area, as well as determination of a technical feasibility and commercial viability of extracting mineral resources. What they say clearly. You have mineral rights, mining, stones, oil, granites, tungsten, everything you get the rights to record. So now what happened is this mineral resources you need to account it, right? Yeah. Need to account it. So how they have given a permission to dug up to this much depth, this much area only you can dug it out. Such many rules will be given. So in this case, the mineral resources, mineral oil, everything they will say give a updated legal rights now. How do you specifically account? How, how what is the cost will be there? What are the asset we need to hold in asset? How much we need to put as a liability? Everything is important. So that has been said. Exploration and evaluation of expenditures or expenditures incurred by the entity in connection with the exploration for and evaluation of mineral resources before the technical feasibility and commercial viability of extracting of mineral resources are demonstrable. There's two things. When you're going to extract, there are two expenditure incurred by the entity in connection with exploration for an evaluation of mineral resources before the technical feasibility and commercial viability for extracting mineral. So before that, we need to bring some technicians. They will put the holes in different areas, and you see. So in this depth to this much depth, we have this resources. So in this area, all this area, this is the probability we have so that you can gain up to this much resources. That will cost you something. So they will every 1 meter they will cut it out and they will see. So from this area to this area we have this resources. The total of this surroundings, this is the total viability cost. They will say that is the expense is going to incur. Pre-incorporation expenses like this is then exploration evaluation expenditures. An exploration and evaluation. Assets or expenses also exploration and evaluation expenditure recognized as asset in accordance with the entity's accounting policy. What is this saying? Exploration and evaluation of recognized asset in accordance with the entity's accounting policy. Now we have the legal rights to explore this. We have the land under the reserve something. The land is going to evaluate or how will you going to add it in the asset? Right? Because something we cut it out and we are selling it. Okay, we need to consider some asset valuation. Yeah, we have the rights now. Right should be valued. How are we to measure it? That is also one measurement. The evolution, exploration, and evolution assets or initial recognition can be measured at the cost. Can be measured at cost. Entity shall determine an accounting policy specifying which expenditures are recognized as exploration and evolution assets are not. Entity shall determine accounting policy. Specifying with expenditures are recognized as exploration and the evolution of assets and apply the accounting policy consistently. So we need to evaluate that and that some accounting policy we need to follow by based on consistency, approval, going concern. That is going to be followed. So measurements are always consistent. Very good. After the initial recognition, entity shall apply either the cost model or the revaluation model to the exploration and evaluation asset. So we're going to have it into the entity as asset. What we can do whether the total amount of cost we put into finding that can be put into asset, or we can have a revaluation model that based upon the exploration. The revaluation model can be accordance with India AS 16 and India AS 16 and AS 18. India AS 16 or AS 18, but the same be consistent with the classification of asset. So either it can be as per the Ind AS 38 or it can be AS something, say RHD. But it should be somewhat consistent with the AS or Ind AS. The expenditure related to the development of mineral resources shall not be recognized as exploration and evaluation assets. Uh, the expenditure incurred, okay, this expenditure incurred related to development of mineral resources shall not be recognized. The expenditure related to development of mineral resources shall not be recognized as exploration, evolution, as what is this development of mineral resources? Sir, before getting this lease, we bought some land. We bought some cleaning this land and all. To get this exploration, we need to clean the land. We need to do some payments to some officers. To need to get some kind of expense that we do not that can be included in the evaluation of asset exploration. You can't put as expenditure relating to this development of mineral resources. Entity shall recognize an any obligation for removal, which is very important point. Expenditure related to development of mineral resources shall not be recognized in the exploration and evaluation of asset. The entity shall recognize any obligation for removal and restoration that they incurred during the particular period as consequences of having undertaken the exploration for and evaluation of mineral resources. It shall recognize any obligation removal and restoration that incurred during a particular period as a consequence of having undertaken the exploration for and evaluation of mineral resources. So they need to remove like example after mining there is going to be some consequences. What is the consequences? Government will give you after mining you need to fill this pit, you need to plant these trees, you need to develop this roads where you transported out of this minerals, you need to pay this much dues, you need to contribute this much of the revenue to environment. Such a way as a rules that you need to follow. Standard the permits an entity recognizing exploration and evaluation costs to apply para 10 of India AC 8 to develop an accounting policy for exploration and evaluation of assets. The required entity recognize exploration and evaluation assets to perform an impairment test. The required entity recognize exploration. So they recognize exploration and evaluation of asset to perform the impact test on the assets. Then when the facts and circumstances suggested that the carrying amount of the asset may be exceed the recoverability amount. Wow. So they need to see the facts suggest what is the carrying amount of the asset may be exceed its recoverability amount. What they are saying is you can't go on loss. For exploration, you need cost. Not only the cost, that cost should be within the parameters. You should recognize what is can be recoverable. Not you can't recognize every expenses that is not part that going to recover. The facts and circumstances suggest that the carrying amount exceed recoverability amount. Entity shall measure and present and disclosure any resulting impairment loss in accordance with India's 36 impairment laws. If they think that, sir, you having the asset through which you are not going to get recover the total amount what you are expecting, then the amount what you going to expect it to recover is very low. You are thinking that you get around 1 crore rupees in this exploration, but the actual recoverability is only 70 lakhs. 30 lakhs is impairment loss. The recognition of impairment that from that it is India 36, but the measurement of impairment is accordance with the standard once the impairment is identified. So once you find that impairment that you are not going to recover the actual cost you inputted in the mining operation, you are going to recover very less. The impairment loss should be considered. Impairment loss should be considered because you have a mining license only for 5 years. But in the end of 4.4th year, you say you only recover only 40 percentage of the cost you incur. Yeah, 90% percentage of the 80% of the life of this mining is gone. But at the year of 44th year license, you have only recovered 40 percentage of your cost. Then what is that saying? That is impairment loss. You need to book the loss in the end of fifth year. Completely. At the end of fifth year, after the license is going to get, even they say we're going to get the license back. We're going to renew the license. But at the end of the fifth year license, whatever the asset you booked should be considered as loss. Impairment when the facts and circumstances suggest that data carrying amount exceed the recoverable amount, entity shall measure the present and disclose any resulting impairment loss. One or more of the following facts and circumstances indicate that the entity should take the exploration, evaluation of asset for impairment. The period for which the entity has a right to explore a specific area has expired during the period or will expire in a near future and not expected to be renewed. So the period for which entity has a right to explore to specific area has expired during the period or will be expired in near future and it's not expected to be renewed. The three comes I'm sure now under the end of the fourth year, it's going to expire. In the end of fifth year, it's expired. And its third concern, it's not a possibility you can't renew this contract. You're not able to renew. Then it's impairment loss. The actual asset, what you recovered, the difference in the asset you have booked as asset, that should be considered as loss. The substantial expenditure on further exploration for an evaluation of mineral resources in the specific area is neither budget or non-planned. Some expenses you are doing, which is crossing the budget and planned project, that expense to be impairment loss. The exploration for and evaluation of mineral resources in a specific area have not led the discovery of commercially viable quantities of mineral resources, and the entity has decided to discontinue such activity in the specific area. One area you're going and seeing, and you got license for 10 areas, but out of that, 7 areas there is a viable commercially viable quantity of exploration minerals you found, but other three areas you found but it's not commercially viable. Then the expense which you have done in that part of three areas should be imperative loss. Sufficient data exists that indicate that although the development is in the specific area is likely to be proceed, and carrying amount exploration evaluation asset is unlikely to be recovered in full form of successful development or by sale. So some company what they do is they not only have this policy, they will get the license, they will find the land, they will find this is visible, this is viable business. They do everything, it can be recovered. But they don't mind. They actually sell the land to someone. And so now what happened is they you didn't do the mining. So total cost which incurred in finding this will be impaired to loss. Entity shall determine accounting policy for allocating exploration and evaluation of assets to cash generating units or groups of cash generating units for the purpose of assessing such assets are impairment. Each cash generating unit or group of unit on which exploration and evaluation assets are allocated shall not be larger than the operating segments determined according to India's 108 operation segment. Disclosure. Entity shall disclose the information that identifies so entity shall determine the accounting policy for allocating exploration. Whatever the exploration accounting policy need to find. They also need to follow India's 108 operating segment. Also evaluating asset of cash generating unit or group of cash generating unit for the purpose of assessing the impairment. So not only a single thing, you want to see all the things out of that you plan for all things. Only seven succeeded, three lost, no, and that will consider as impairment loss. Such a way you need to do each and every steps what being given four step. Previously 4 points we said now. You should consider while finding the impairment loss. Disclosure. An entity shall disclose information that identifies and explain the amount recognized in the financial statement arising from the exploration for an evaluation of mineral resources. You need to show this amount is being considered as is considered as an asset. Why you calling as asset? Because it is done in pre of exploration. This is done for planning. This is done for bringing the consultant into it, and this is bringing a technician into it. And this all the thing expenses which you need to come book as a asset. And next, so we are booking this as imperative loss because we are not able to renew the contract. The period is done, and the period of exploration is much lesser than the actual recovered cost. And not more than that, there is any discontinued operation, any asset that's been sold. It's all to be considered as imperative asset. The entity shall treat exploration and evaluation of asset as a separate class of asset and make the disclosure required as per NDA 16 or NDA 38 consistent with how the assets are classified. So by enacting NDA 16 and NDA 38, you need to assess classify the assets promptly and correctly.